Good evening, friends. Our topic for discussion today seminar is critical issues and common errors in tax audit report. Institute has recently come out with a study in which they have listed so many errors, common errors which we chartered accountants do while filing the returns. These errors, some of them may be very, very simple errors, and some of them maybe have some bearing, but then errors are errors. And we all know that as of now, the income tax department is taking a very, very tough posture so far as on filing of the reports by the chartered accountants is concerned, including the audited balance sheets and various reports which we are submitting with the department. So at this time, we cannot afford to have any mistake, even if it looks to be very, very small mistake, but even those mistakes can't be tolerated now, and one has to pay full attention to before filing of the returns. We have some other many provisions in the tax audit reports where we do not have a clarity. Again, one very important addition to the tax audit report this time is clause number 44, which is really causing a lot of problems to the chartered accountants as to how to report. Because the compilation of data is very, very cumbersome, especially in the large company, which has multiple businesses, and the capturing and the software is not destined, it has not been accustomed to capture the data that in which the department is asking for these things. And again, these informations has no bearing on the income tax assessment. So why the department is asking for these informations is something which is very difficult to understand. But still, that is the compliance, and we have to do it. And how we have to safeguard ourselves is very, very important thing. So we have a very learned speaker today, Manish Dafariya from Indore. I remember we had last year a very, very nice session on presented taxation, section 44 AD, ADA, and others 44A, and so many litigative issues on this. So it was a very, very lively discussion, and I expect the same this time. I have sent some of the queries to Manish sir to address, along with his. I could not do much because I didn't have the time, but still whatever I could do to make this session very, very interactive. And I request all the participants here to make this session very, very interactive rather than a monologue, because tax audit report is nothing new. It is a very, very old reports, and unless there are some additions and deletions, some additions, not the deletions are always never there, but there are some additions to the points. Those are the things, and just to refresh our mind and refresh, because this is a tax audit season, we are going to start completing the tax audit right now. So if you are geared up, we have to gear up to file the tax audit report, compile the tax audit report in the proper way. And before that, I would like to introduce, before I ask Manish to start his delivery, I would like to introduce him. He is a BCom from DAB Indore. He qualified as a chartered accountant in 1993. He is also done MA in economics in 1995 from DAB Indore. And he is also DISA qualified. He is a partner in VK Dafariya and Company Chartered Accountants Indore. He is a visiting faculty in IIM, in Indian Institute of Corporate Affairs. He is a faculty in Direct Tax Regional Training Center, Bhopal. And with the income tax departments, he gives a training there, also conducts workshops for commissioners, joint commissioners, assistant commissioners. He is a faculty speaker in the ICI also. He teaches CAs in post-qualification course also. He also contributes by writing in ICI Journal, Corporate Accountants Today, Forum Views, PSC Brokers Forum, Dainik Bhaskar newspaper, and Tax Guru online portal. He has written 2 articles on international taxation also in respect of TDS under section 195 on fees for technical services and others. He is a co-opted member of Direct Tax Committee of the ICA in 2014-15. He has been nominated by CBDT as a member of Regional Direct Advisory Committee for 2 years, 2011 to 2013. He has been invited by Income Tax Department, MP Sales Tax Department, MP Police Departments, to discuss on the various topics, including on the forensic audit service tax. He has presented papers in the national regional conferences also. He is delivering budget speeches in the various cities of the country. He is the executive committee member of Institute Indoor Management Association, and he is represented Indoor University in state level youth festival also in quizzes and debates. So now it's over to Manish ji for his deliberation. And I request all the participants
तो डिटेल तो chat box. अरे आप तो कहीं भी मैं तो डाल दियो नहीं सारी चीजें. ये के पीछे
and keep yourself mute, please. I will request all the participants to keep themselves mute so that others are not disturbed. Over to Manish ji.
Thank you, Pramodji. Nice to interact with the members of study chapter again. I think last year we had a very interesting discussion about all these presumptive taxation provisions, section 44 AD, ADA, AE. And now this year again we are interacting on the same provisions prior to this presumptive taxation, that is section 44 AB. Somehow I feel this number 44 has got a very specific significance in the life of chartered accountants. Okay, all these income tax procedural complications center around the section 44, the presumptive taxation issues, then this whole tax audit. And then to top it all, this year we have this clause 44 again in 3CD, which is just creating a whole lot of problem for the profession, how to report all these GST related issues. So it's an attempt to understand various aspects of this number 44 so far as this auditor's aspect of taxation is concerned. Section 44 tax audit related provision, as very rightly said by Prabodji, we all are familiar, we all are accustomed to this whole idea of tax audit. 1984, they have introduced this whole concept of tax audit. So each one of us is well versed with this whole idea of tax audit, but still there are certain issues. Still there are certain aspects which probably require a further clarification or a refresh. Refreshing the whole generating the whole clarity again. So what we will be doing in this today's discussion, I'm not going to tell you anything new about this whole tax audit. We all are familiar with it. But what we are going to do is to touch upon certain critical aspects, certain issues where probably still a clarity is required. So we will try to have a discussion around those topics and then try to come out with a solution, with a clarity of mind, that how to what is expected from the tax auditors in those particular specific situations. Okay. I have segregated this whole discussion into two parts. First part we shall be devoting part we shall be devoting on the very basic aspect of applicability of tax audit itself. What all are the cases where we need to have some clarity about the applicability part. After having discussion about this applicability part of tax audit, then certain issues related with the reporting aspect from 3CD various questions, including that clause 44, the new clause from this year. So that will be the second part of our discussion. As again mentioned by Pramodji, simple request is to keep the discussion as interactive as possible. I'm not a guru kind of person coming from somewhere else and then trying to give all the gyan to this fellow professionals. I'm also here to develop some understanding, some clarity about various issues of tax audit, which we all can generate by a mutual discussion in an interactive manner. So feel free to raise all your queries during the course of discussion. I'll try to answer them to the best of my capability. And I would urge other members also to participate even in answering the queries. What are their views on a particular aspect? Everybody can share, everybody can discuss. We all can come to a common consensus. Okay. Just give me a second in order to share my screen, a small PPT I have developed. Okay. So fine. Practical issues on tax audit. the story of a superhuman tax auditor. I call a tax auditor as a superhuman. And why I say so, I have definite reasons for it. We will be discussing about it. What all are the expectations, and I don't know to what extent we all are capable of meeting those expectations which are there from the tax auditor. Okay. But then let's start with generating some very basic clarities about this whole gamut of tax audit, basics of this tax audit. Yeah, we all set. Basics of tax audit. The very first aspect, we all are familiar about this. There are two formats of this report, 3CA plus 3CD or 3CB plus 3CD. When there is an audit happening under any other act, then I have to give my report in form 3CA along with that 3CD. If there is no audit under any other act, it's a plain simple tax audit only, then this has to be 3CB plus 3CD. A small clarification here. There is a possibility that assessee is required to get audited under any other act, but because of certain reasons, the audit has not been done under that particular act. It is still pending. And then the return is to be filed, the audit is to be done. What is the way out? For example, there is a company, because of certain reasons, the accounts have not been finalized for that particular company. The audit is still not complete, but still the returns are to be filed. Returns are to be filed. Losses might be there, which are required to be carried forward. So then, as a tax auditor, what I'm supposed to do? Institute guidance note is very clear on this particular aspect. If audit is required under any other act, but because of certain reason, the audit is not happening under that particular act, then as a tax auditor, I need to do a financial audit and submit my report in form 3CB along with form 3CD. Like we are having this very famous case currently going on with respect to this education startup Byju's. Byju's say probably even 21 accounts are not yet finalized. Okay, this is 21 accounts are pending now. 22 is also going on. So how as a tax auditor of Byju's I'm supposed to act? Then my submission, my reporting would be in form number 3CB plus 3CD. Because the company audit is still not done, it is still pending. So for tax auditor, form number 3CB would be the appropriate form. 3CB requires me to do a true and fair certification. So that's an extra responsibility which I'll be taking on myself when I decided to go for form number 3CB. But this is what ICI guidance note is proposing. If required to be audited under any other act, but audit not done there, the tax audit report has to be in form number 3CB, 3CD. There's a small, the very small issue related with this format of reporting. And after this, we come to the applicability part of tax audit. Okay. Certain typical situations where probably a clarity is required, whether tax audit is applicable at all or it is not applicable. So we all know the basic provision for this whole tax audit comes from section 44AB, clause A, B, C, D, E. 5 clauses are there which generates a responsibility of tax audit on the assessee. So these are these 5 cases. my assessee is in business having a turnover of more than a crore of rupees, then tax audit is needed. 44AB clause A. Assessee engaged in profession, gross receipt is more than 50 lakhs of rupees, then the audit is needed. Clause B. 44 AE, 44 double B, 44 triple B, presumptive taxation, profit less than minimum prescribed amount. 44 AB clause C is applicable. 44 ADA, assessee is engaged in a specified profession, gross receipt is less than 50 lakhs, profit is less than 50%, and income exceeds maximum exemption limit, then the audit is needed. Okay, a small point of say caution again, 44 AE and 44 ADA, both are presumptive taxation provision. 44 AE says the moment you declare profit less than minimum prescribed amount, that transport operator minimum prescribed per vehicle basis minimum prescribed amount. Now 44 AE says if you are covered under 44 AE, the moment you declare profit less than the minimum prescribed amount, the audit would become mandatory. 44 ADA is not that much direct. It is saying that you are declaring profit less than minimum prescribed amount, 50%, but then audit would be mandatory only when your income exceed maximum exemption limit. So this income exceeding maximum exemption limit criteria is there with respect to 44 ADA, and it is there with respect to 44 AD also, but it is not there with respect to 44 AE, that transport operator presumptive income. The moment declared income is less than the prescribed income there, even if it is less than exemption limit, still audit would be necessary with respect to that 44 AE. So these are 5 clauses, 5 cases. With respect to this very first tax audit case, that is normal business case, turnover more than a crore of rupees, assessee is not covered in 44 AD also, then they have introduced this particular exemption, increasing the limit to 10 crores of rupees if the criteria of 5% cash receipt and cash payment is fulfilled. We are going to have a detailed discussion on some of the aspects of this whole cash receipt, cash payment, 5%. It's a very, very interesting kind of provision. Though I fail to understand why they have given an exemption from tax audit, even if my 100% receipts and payments are in bank. How come the tax audit exemption has got any relevance in that particular case? Even if 100% bank transactions are there, but still there are number of issues which are part of my 3CD reporting, which needs to be addressed, which needs to be highlighted before the income tax department, even if there is a 100% bank transaction. But lawmakers in their own wisdom have given this particular exemption that if your cash transactions and cash receipts and cash payments are not more than 5% of your total receipts and total payments, up to 10 crores, the audit would not be mandatory. Some of the issues around this particular exemption, we will be discussing further in detail. Okay. Now, so after generating this quick recap of probably what we all know already, let's come to certain ticklish issues related with this whole applicability part. Okay, these are certain questions probably I would like to put before the audience, and then I would like to have response from your side. This is the very first plain simple case. One assessee having 2 different businesses. These 2 businesses are entirely different. Nature-wise, they are different. Location-wise, they are different. Separate books of accounts. Everything is separate. Each business turnover is less than a crore of rupees. Whether audit would be necessary?
It is required, sir. Because it is a SSC-wise business, na? You have to do the SSC-wise.
Absolutely correct, sir. So plain and simple case that the tax audit would be necessary. The provisions of section 44AB are assessee specific provision. They are not business specific provision. Okay. So even if at a business level, my turnover is less than a crore of rupees, at assessee level, I'm crossing that particular threshold, audit would be necessary in that particular case. All those that 5% cash payment, cash receipt criteria are separate, 44AD application is separate, but plain simple that 1 crore limit is required to be seen with respect to the assessee, not with respect to the particular business. Okay, first plain simple case. Now let's come to second situation. Now this is a case, sir. Assessee is having a business as well as profession also. For example, there is a doctor, along with this medical practice, he is having a pharmacy also. A sale of a medicine is also happening. And then doctors are having his own clinic where he does all these consultancy, runs a profession. Along with this, there is a business also. The business turnover is less than threshold, 1 crore of rupees. Professional receipt is more than 50 lakhs of rupees. Now, whether tax audit would be necessary? If it would be necessary, it would be of business and profession both, or it will be only of profession.
It will be only for profession, sir, in my mind. Because business first is 44ABA. Second one is 44ABB, profession.
Yeah, and we are not talking about 44AD applicability here. There is no presumptive taxation case. We are plain simple 44AB applicability we are discussing. Okay, we are having one answer in chat box. Dhan Prakash Agrawal ji is saying only profession audit would be applicable. Pramod ji is also of the same opinion that only profession audit would be required. Any other answer, sir? Any difference of opinion? Okay. Now, this is what ICI guidance note is very, very clear about. The audit has to be of business and profession both. Once you are into audit, you are into audit for all purposes. You cannot be in audit partly. This is what is the very clearly spelled out by the institute and guidance note. So you cannot say, I'm into audit only for profession because here my gross receipt is more than 50 lakhs. Once you are into audit, you are into audit for all the practical purposes. Okay. Common sense approach would always tell me is I'm crossing the limit only for profession. So I am subjected to audit only for profession purposes. But a deeper understanding, a deeper analysis of the provision will give a very clear-cut view on this. ICI has spelled out very, very clearly. Once you are in audit, you are in audit for all the purposes. So audit would be applicable for business and profession both. Okay. There is a query by Shiv Mundaji's profession can opt for section 44AD. Okay. So far as 44AD is concerned, I think probably this whole presumptive taxation, last year we already had a seminar, and this whole presumptive taxation is a separate matter of discussion. But in any case, whenever you talk about a tax audit, presumptive taxation issues are bound to interfere. So, so far as this profession can opt for 44AD is concerned, so, for profession, the applicable section is 44ADA, not 44AD.
Yes, sir, 44ADA. It is 44ADA.
Yeah. So, profession can definitely opt for 44ADA, provided the gross receipts are not more than 50 lakhs of rupees. So, if you are talking about based on this particular set of data, so profession gross receipt is more than 50 lakhs, ADA is not applicable.
Yes.
Okay. So Darshan Sampatji is pointing out something very interesting, but 3CD has a clause which says whether any presumptive profit included in profit and loss. Okay. So whether any presumptive profit included in profit and loss, that is one thing. What is required is audit for all the activity. This is what ICI guidance note is very clearly spelling out. that once you are in audit for professional purposes, you are in audit even for other activities also, even for business also.
But sir, if someone opts for 44ADA, if the gross receipts from the profession is less than 50 lakhs, then I think he need not have to have his accounts audited. If the other business
If we
receipts
change,
doesn't.
okay, if we change this example, the professional receipts are 45 lakhs only, then very clearly, I'm not covered by 44 AB, neither for profession nor for business. For both the activities, I'm not crossing that particular threshold. So audit is not applicable. The point is, when I'm into audit for one activity, then I'm into audit for all my activities. You might be having two different professions. One is having 54 lakhs, second is having 30 lakhs. Then again, because the provisions are specific, your total gross receipt is more than 50 lakhs, you are into audit, and you are into audit for all your activities.
So in this case, sir, if I have two businesses, which query I have given you also, if in one business 95% of the total receipts and payments are by check and digital transactions, in other business it does
So we
not
will
have.
come to
Still,
that.
then you have to get
We
the
will
audit.
come to that 95% issue
Okay.
later on. Then probably I'll take up your that particular query. Okay. So this is another aspect of this whole applicability part. Now, this is something very interesting, sir. This whole 5% criteria has got lot many issues connected with it. So let's take first issue here. Now there is this individual HUF of firm having turnover between 2 to 10 crores, but they fulfill 5% criteria for cash receipt and cash payment. Okay, 95% or more than 95% are my bank transactions. So then very clearly in first case, the audit is not applicable. I get saved by that exemption given in 44 AB clause A. The point is this, I'm having turnover less than 2 crores. I'm covered by that 44 AD. Now I'm declaring profit less than 8%, 6%. My income is more than maximum exemption limit. So by virtue of 44 AD, I need to get myself audited. Now, whether I can claim this 5% criteria exemption in this particular situation. Okay. Dalmia ji is already having an answer. No. So very typical kind of situation, but requires one to think very deeply about the way we have the lawmaking done in our country. Somebody is into tax audit only because of 44 AD issues. I'm covered by 44 AD, but my profit is less than that 8%, 6% criteria. So because of 44 AD, I'm required to get myself audited. Now, in this scenario, whether I can claim the exemption from tax audit based on that 5% cash transaction criteria. Okay. 44 AD is optional or mandatory. That is another issue probably we would be discussing at the end of this discussion, and not directly related with 44 AB, but still I would try to answer to that query. But right now, again, focusing on that 5% criteria, somebody into 44 AD and required to get audit only because of that 44 AD provision, even if he is having 100% bank transaction, but still the tax audit would be required in that particular case. That whole exemption of 5% cash receipt, cash payment is applicable only when you are into audit by virtue of 44 ABA. If you are into audit by virtue of any other clause of 44 AB, then that 5% criteria is not at all applicable on that particular assessee. So this is a very interesting situation, sir. See it very a little bit carefully, and you will realize that there is an assessee who is having a turnover of probably 8 crores of rupees. And against that 8 crore turnover, he is declaring a profit of 10 lakhs of rupees. Simply because he is having 100%, at least 95% bank transaction, no audit would be necessary. 8 crores turnover, 10 lakhs is the profit being declared, way less than 8%, 6% on around 1.5% kind of profit is being declared. still audit is not required because of that bank transaction. Another case, there is an assessee in place of 8 crores turnover. This person is having around 80 lakhs of turnover. Against that 80 lakhs turnover, now he is declaring a profit of say 6 lakhs of rupees, slightly below 8%. 80 lakhs turnover, 6 lakhs profit he is declaring. Audit would be necessary even if this person is again having 100% of bank transaction. So exemption from audit based on bank transaction has been given to higher level assessees, but not the small scale assessees. If you are into 44AD, you have to declare the profit as per that 8%, 6%. If you declare profit less than 8%, 6%, even if you claim, sir, I am having 100% bank transactions, still audit would be mandatory. So seen from this particular angle, one fails to understand the thought process behind the lawmaking. 8 crore turnover person, simply because 100% bank transaction, no tax audit is needed, whatever is the quantum of profit he is declaring. A person having around 80 lakhs of turnover, even if 100% bank transaction, but if his profits are less than 8% or 6% in this case, still the audit would be mandatory in his particular case. So something of a very interesting situation, that the interrelationship of different set of provisions. This is another interesting case. Now this is in fact 44AD applicability. Now there is this individual HUF partnership firm, turnover is less than a crore of rupees. Declaring a profit is also less than 8%, 6%. Income is more than exemption limit, but at the same time, this person is having some commission income. Probably a 5,000 rupees commission income, or for that matter, even 1,000 rupees commission. Whether audit would be necessary.
So 44AD cannot take because commission income does not. In this case, 44AD is not applied. Does not apply. So he has to go for the tax audit.
Rightly said, sir. The moment assessee is having some commission income, he is out from the clutches of 44AD. Then whether audit is needed or not, that would be decided by 44AB clause A. The moment even a small commission income is there, 44AD is not at all applicable on that particular assessee. If 44AD is not applicable, then whether the audit is required or not, that will be determined based on 44AB clause A. If my turnover is more than a crore, audit is needed. A turnover is less than a crore, audit is not needed, plain and simple. So now in this particular case, having a small amount of commission income, and that is saving the assessee from the mandatory audit requirement created by section 44AD. It is very, very necessary to understand, sir, whenever we are talking about tax audit, it is very, very necessary to understand my tax audit requirement is getting generated from which particular clause. That 44AB 5 clauses are very, very important. Under which particular clause my audit requirement is getting generated. If I am talking about 44AD clause A, that is the normal tax audit provision. 44AB clause A, that is applicable only when my turnover is more than a crore of rupees. 44AD audit is covered under section 44AB clause E. So only when 44AD is applicable, then even if my turnover is less than a crore, audit may be required. But if 44AD is not at all applicable, then audit would be applicable, audit would be required only when the turnover is more than a crore of rupees. Okay. Okay. Now we have an interesting query, whether the audit would be required even if there is no commission income and assessee has never opted for section 44AD and does not want to opt even now. So very, very interesting question regarding 44 AD applicability, sir. Whether 44 AD is mandatory for me, or I do have an option to apply for 44 AD or not. So one thing is very clear. If you have once gone for section 44 AD and then you want to come out of it, then there is a clear-cut mechanism given by section 44 AD4 and 44 AD5. Once you are in tax 44 AD, then you want to come out of it, then for 5 years you have to be mandatorily remain out of it and get yourself audited, and all those issues are there. The interesting question is this: I have not at all gone for 44 AD. Earlier also I was not under 44 AD, and this year also I don't want to go for section 44 AD. Whether 44 AD would be fastened on me, whether I would be perforce required to go for 44 AD, or I can decide that I'll be maintaining books of accounts and I don't want to go for 44 AD. My opinion is very, very clear on this, sir. If you were not under 44 AD earlier, nobody can throw you forcefully inside 44 AD. Once you have opted for 44 AD, once you have gone for 44 AD, and then you want to come out, then all sorts of complications are there. But there is an assessee who has never gone for 44 AD. He is maintaining his books of accounts and everything properly. So no need for 44 AD. The audit requirement would be decided plain and simple based on 44 AB clause A. Up to 1 crore of turnover, no audit is needed. More than 1 crore of turnover, then audit might be required in that particular case. Okay. So I think this is something related with 44 AD. In all my discussions, in all my seminars about tax audit or presumptive taxation, this issue is always there. So 44 AD, whether it is mandatory to go for 44 AD or not, at least I am having a clear-cut opinion on this. Once you are into 44 AD, then there is a problem. But I have never gone for 44 AD. I can remain out of this 44 AD for always. Okay. So these are certain issues related with this applicability part of tax audit. Then come to another issue related with this tax audit, turnover based criteria. Many of our assessee are into this particular situation. The whole lot of day trading and then F&O transactions and all have been done by them. COVID induced free time available, and then all these app-based transaction making things very, very easy. So many assessees are there indulged into a whole lot of F&O transaction, day trading, speculative transaction, whether the audit would be necessary in that case or not. Some of my trades have resulted into profit of 70 lakhs. Some of my trades have resulted into loss of 40 lakhs. Whether tax audit would be necessary. Again, ICI guidance note is the only guidance available to us in this particular case, where they say that turnover is to be calculated in case of speculative transaction, in case of F&O transaction. The turnover is to be calculated by adding profit and loss both. So ignoring the plus or minus sign, the total of all the results is to be taken, and then based on this, the turnover is to be determined. So here profit is 70 lakhs, loss is 40 lakhs. Based on ICI criteria, my total turnover is 1.1 crore. The moment I cross 1 crore, then I am into 44 AB clause A. Audit would be applicable in that case or not. Probably that 5% cash transaction criteria would also be relevant in case of a day trader. The turnover is 1.1 crore, but we all can see that 100% of my transactions are through bank only. So though I am into 44 AB clause A, but because of that 5% criteria, up to 10 crores turnover, audit would not be necessary in that case. Yeah, so Dhanprakash Agrawalji has already pointed out this thing, that turnover is more than 1 crore. In this particular example, what we are discussing, the turnover is more than 1 crore of rupees. So I'm into 44 AB clause A. The moment I'm into 44AB clause A, I need to look for that 5% cash transaction criteria also. In the case of day trader F&O transaction, 100% of my transactions are through bank only. So then my limit would be 10 crores in that particular case. Okay. Another interesting issue related with this turnover. So we are right now on the applicability part of tax audit. Okay, for applicability part, the turnover is the basic criteria. So some issues related with the turnover. Now, in the case of a partner of partnership firm, what is included in turnover? What is not included in turnover? My share of profit. I'm a partner in a partnership firm, and then I'm getting a share of profit from. So we are talking about turnover of the partner. Now, partnership firm matter is over. Now, the turnover of the partner from that partnership firm, I'm getting a share of profit. Whether that amount of share of profit, my share of profit in the profits of partnership firm, so that my share is includable in my turnover. ICI has again given a very clear-cut answer. No, the share of profit being an exempted income under section 10(2)(a), not required to be included for turnover purposes. But then what about remuneration from the firm? And this may happen with respect to chartered accountants, a partner in a partnership firm. The remuneration amount which this partner is getting, that remuneration itself crosses 50 lakhs of rupees. The moment professional receipt is more than 50 lakhs, the tax audit is necessary. So whether with respect to that partner whose remuneration from the from the CA firm is more than 50 lakhs of rupees, whether the tax audit would be necessary? The answer is very clearly yes, because this remuneration of firm is under section 28(4), 28(5) is part of my business income. It is includable in my gross receipt. There are good number of decisions also, including I think at least two high court decisions from Calcutta High Court itself, where they have made it very clear, very categorically, that the remuneration received by partner from the partnership firm is a professional receipt in his hands, and an audit would be necessary in that case. Share of profit, ICI has made it clear that this is an exempted income. Okay. So another interesting question: what about remuneration disallowed in the hands of firm? So because we are talking about this whole remuneration with respect to section 28(5) itself, 28(5) makes it very clear that whatever remuneration has been allowed in the hands of firm, that would be included in the that would be taxable as business income of the partner. So that the word gross receipt may refer to the total remuneration of the partner, but strictly speaking, because we are taking the basis of 28(5), where section talks about only that much remuneration which has been allowed as deduction to the partnership firm. So again, my understanding is this, that only that much remuneration which is actually taxable in the hands of partner, that much remuneration is to be considered for this particular purpose. Okay. And then there is a question related with this. Again, not part of tax audit issue, but part of presumptive taxation. That sir, if the remuneration of partner is taken as gross receipt, is to be considered for tax audit purposes, whether for this particular remuneration partner can opt for 44ADA, the remuneration received from the partnership firm, whether 44ADA can be taken by the partner. Strictly speaking, sir, as per my understanding of law, the remuneration received by partner, there is no reason why it should not be eligible for 44ADA. First thing, as I read the law, as I read the whole jurisprudence, there is no reason why partner should not be entitled for 44ADA with respect to the remuneration received from the partnership firm. But then, having said this, I'm conscious of the fact there are certain tribunal level decisions which are against this particular proposition. where honorable tribunals have said that for this whole partners remuneration, 44 ADA would not be applicable. Though personally, with all due respect, I fail to understand the justification behind this particular state. Because when audit requirement is there, then high courts are saying that partners remuneration is a part of gross receipt, and accordingly the tax audit applicability needs to be decided, taking into account this remuneration received by the partner. But when 44 ADA issue comes up, then tribunals take a different stand and they say, no, 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 this is not a professional receipt as contemplated under section 44 ADA. So probably the last word is not out with respect to applicability of 44 ADA on partners remuneration. My personal understanding is again that 44 ADA is available even with respect to partners remuneration also, as I read the law. What is the ultimate stand taken by judiciary? Only time will tell. Okay. Now coming to this 5% criteria, exemption based on that 5% criteria. Just have a small discussion about what exactly is the requirement here. Now, since last 2-3 years, they have introduced this particular relaxation in tax audit, and the government is taking a big credit on this, that we have given a big relief to the small businessmen who are digitally doing their whole business. So the audit requirement has been removed with respect to these type of businesses. Government is taking a good credit of it. I fail to understand what is this bank transaction having to do with the 3CD reporting, but this is what is the provision. What they say, that in case of an assessee carrying on a business, cash receipts are up to 5% of your aggregate receipt, and cash payments are up to 5% of aggregate payments. Cumulative conditions, both requirements are to be fulfilled. Receipts are up to 5% of aggregate receipts, payments are up to 5% of aggregate payments, and then the turnover is up to 10 crores of rupees. The audit would not be applicable. Section 44AB clause A would not be applicable in this particular case. Now, one or two things I would like to highlight here. First of all, this particular exemption is applicable only with respect to business. If I am a professional, more than 50 lakhs gross receipt audit is applicable. Now, no matter how much is the quantum of my bank transaction, how much is my cash transaction, I cannot claim an exemption of this particular nature. So there is a chartered accountant firm having a say turnover of something around say 3 or 4 crores. 100% of their transactions are through bank only, and then they try to claim an exemption from the tax audit based on this bank transaction criteria. Sorry, they are not allowed. This whole exemption of 5% based cash receipt, 5% cash transaction based exemption is applicable only with respect to business. And as we have discussed earlier, even in case of business also, with respect to 44 AD businesses, again, this exemption is not applicable. So if my audit is there because of 44 AD problem, then even if I am having 100% cash transaction, audit would be required. So for a very limited set of assessees, this particular exemption was given. Now, another very interesting aspect related with this whole cash transaction criteria, what they are saying that 5% cash receipt, 5% cash payment is required to be seen with respect to total receipts and total payments. So total receipts and total payments would include revenue nature transaction, capital nature transaction, also loan taken by the assessee, loan repaid by the assessee, all are covered. Okay. In the ITR form, they have got a specific questionnaire with respect to compliance or fulfillment of this particular criteria. And in the ITR form itself, they have mentioned a total receipt would include revenue receipt, capital receipt, loan taken by the assessee, everything would get included here. So this is very well possible that my actual sale purchase, a large part of my actual sale purchase is happening in cash, still I may qualify for the purpose of this exemption, because all the loans I'm taking and I'm loan repayment I'm doing, that has to be by default by way of bank transaction only, because of that section 269 SS 269T issue. All loans taken, loans repayment are by way of bank transaction only. So this is very well possible that my actual sale purchase is happening in cash. A large part of my actual sale purchase, all my actual business expenditure are in cash, a large part of it. Only because my capital nature transactions are there, huge quantity of capital nature transactions are there, loan taken, loan repayment, which are by default by virtue through bank mode only. So still assessee may qualify for the purpose of exemption from tax audit because of this 5% criteria. This is something very interesting and then very, I must say, very funny part of this whole particular exemption. You are saying that business transactions would not be subjected to audit if you are say non-business transactions, loan transactions and all these are say by way of bank, and then the total receipt and total payment, including revenue, capital, all kind of transaction, total receipts and total payments are up to in cash format is only up to 5%. But this is what the position about this criteria is. Okay. Then one more issue related with this whole applicability of tax audit. For the purpose of finding out whether tax audit is applicable in a particular case or not, sometimes I need to distinguish between business and profession also. Even for that 44 ADA also, this distinction is necessary. And for tax audit applicability also, this distinction is necessary. If as a professional, my turnover is more than 50 lakhs of rupees, audit is necessary. In case of business, if the turnover is more than a crore, then only audit would be necessary. So say, for example, somebody is sitting on that 80 lakhs gross receipt, 80 lakhs turnover. If he is a profession, audit is required. If he is a business, then audit is not required. So business versus profession. Now, there are certain very long pending issues in income tax. I must say this thing. कुछ बहुत पुराने झगड़े जो हैं वो चले आ रहे हैं. 1961 they have brought this income tax. Today we are in 22. So more than 60 years have gone by, but still certain issues are still unsettled, still not clear. And one of this issue is what exactly is a business and what exactly is a profession. We can talk about whole tax audit and computation of income under the head business and profession, everything, but still the clarity would be lacking. What exactly is a business? What exactly is a profession? With respect to business, they have given a definition in section 2. For profession also, there is a definition in section 2. And the definition itself is very interesting. For business, they say business includes any trade, commerce, manufacture, including any adventure in the nature of trade, commerce, or manufacture. For profession, the definition is further interesting. For profession, they do not define what profession at all. They simply say profession includes vocation. But profession hai kya? What exactly is the profession? Who is going to tell me? How do I find out? What is business? What is profession? The clarity is eluding. The clarity is still not there. Okay. But these are two different things. That is also very sure. Business is something different. Profession is something different. That is something very sure. So now, how to find out what is business, what is profession? Not many judicial decisions are there. Judiciaries have applied their wisdom on these concepts. And as we all understand, by and large, profession is something which requires use of an intellectual skill, personal skills, and then based on this personal intellectual, whatever you do, that is your profession. A very rough kind of definition. So now very interesting question is there with respect to this business versus profession. There are certain activities where the problem is always there, whether it will be treated as business or it would be treated as profession. For example, this nursing home. A doctor running his clinic sitting in the clinic and then earning income through that clinic practice. So very clearly that is a profession. Now, what about nursing home? The partnership firm is running a nursing home. The partners of the partnership firm might be doctors, may not be doctors. Wives of doctors might be the partner. Other relatives of doctors might be the partners. So now they are running a nursing home. Whether it should be treated as a business or profession, just for the sake of example. We have got certain decisions where a tribunal, even high courts have also said that nursing home is a profession, is a business. It is not a profession. There are decisions, old decisions, 2005, 2006 decisions are there, where honorable tribunals have said that nursing home is a business, nursing home is not a profession, because nursing home is systematically arranging various things and then running it like a complete proper business. It is not only the use of only the personal intellectual skill, it is use of various other handling other management aspects also. So based on these criteria, they have said very clearly that nursing homes are business, they are not profession. Now the problem with all of us nowadays, we all are, so to say, comfortable with what is written in the law, comfortable with whatever has been interpreted by judiciary. But in a sense, we all are scared with the interpretations taken by CPC. God knows what kind of interpretation they take. God knows what kind of software rules they have defined. And then based on this, they process the return, raise the demand, and create all sorts of problem. We all are witness to that particular problem. And that's why in number of cases, I have now started saying that, sir, there are two different types of law in this particular country. One is the law written in the Income Tax Act, which we all of us, we read and understand and interpret. Another set of law, which is there with the CPC. They have got their own way of interpreting the law, implemented God knows what kind of rules in their processing software. And the problem is this, you cannot argue with them. It's a computerized processing. They do whatever they want. You file 154 rectification, they don't listen to it. You raise a grievance, they don't reply to it. So then unnecessary you have to go into appeal and all those things. So now problem with respect to this business versus profession. So the problem with respect to this nursing home, whether it is a business or profession, now this is what is the exactly ITR software and the instructions are attached with that particular software. There are these business codes. And so for nursing home, we have this business code 18003. With respect to my ITR 4, that ITR Sugam, they have given instructions. And in the instructions, they are saying that section 44 AD is not available if business codes are any of these business codes. That means they are treating these business codes as profession, and then they are saying if assessee is having any of these business codes, 44 AD is not applicable to that particular assessee. So out of these business codes, which are not being treated as business, there is this business code which is applicable with respect to nursing home 18003. So the software of CPC, the ITR designed by the Income Tax Department, instructions attached to these ITR, they are very clear that a nursing home code 18003, and that is a code of profession, not a code of business. So now we can discuss the interpretational aspect of it. What is business? What is profession? We can keep on quoting the court decisions, tribunal interpretations, everything is there. But so far as processing under section 143(1) is concerned by CPC, the matter is very clear that nursing home is a code of profession. Nursing home is not a code of business. So even if it is being run by a doctor in the proprietorship or it is being run by the partnership firm, the moment you select code 18003 in your ITR, that is the code applicable for nursing home, the CPC software will treat this as a profession. So your return has to be according to that requirement applicable for profession and not for business. So probably rather than taking a legal view on this, discussing about the interpretational aspect, if we wish simply to go by the CPC logic, CPC go by the income tax department logic. So that logic is very clear, hidden somewhere in this whole tree of a business code and instructions for the ITR. But their logic is very clear. Their viewpoint is very clear. Nursing home is a profession so far as ITR forms are concerned.
सर यहाँ पर जो अपने डिफेक्ट जो बात है आईटीआर प्रोसेसिंग रूल्स के अंदर में, it only I think affects only the section under which the audit is completed, 44 ABA और 44 ABB. इसके अलावा तो कुछ फर्क नहीं पड़ने का है.
No, sir, for 44 AD applicability also.
44 AD का
Yes, AD or ADA. So if I want to say कि साहब nursing home is a business and I declare the profit of 8%, they will process it with the profit of 50%.
Yes, that is true.
So both ways, turnover 50 lakh से कम है, then also there is an issue. Turnover is more than 50 lakh, then also there is an issue. So say for example, I declare.
Why is the CP is not removing this defect? Because this is a very significant blunder. ये जो एक defects आ रही है.
So the point is this: you may take a legal view on this, or you may take a practical view on this. Whatever CPC is saying, that is okay with me. Taking a legal view will always have its own problems. Client may not be agreeable, fighting it out in appeal and facing all those issues. That problem is always there with us. So this is what is the safe fact of the situation. So we may agree or we may not agree with it. That is different. But I just thought I should clarify it with respect to the practical aspect. What CPC is saying. According to them, it is very clear. So say for example, my gross receipt is 75 lakhs. Nature of business, I have submitted code number 18003. And I assume this is a business. Since the turnover is less than ₹1 crore, I have not done the audit in that particular case. CPC would be issuing a notice. CPC would be issuing the intimation saying that you are defective return notice, saying that you have not uploaded your tax audit report. Because for them, this is a profession. And problem would only be in those marginal cases. The moment your turnover is more than ₹1 crore, more than 2 crore, then in any case, audit would be applicable. You take it business or you take it profession. So I hope I'm able to clarify the proposition, sir. Legal proposition is there. I have got a whole lot of case laws available with me, which says that nursing home is a business. So based on this, we can always argue. We can always fight it out in appeal. But the question is, would we like to go into that particular mode of argument? Would we like matters to reach to appeal in the first place? Okay. Fine. So these are certain issues related with the applicability part of it, sir. Then let's come to the second aspect of this whole tax audit scenario, the actual reporting.
Sir, ये first part से related एक दो मेरी query है, मैं पूछूं उसके लिए.
हाँ, बताइए ना sir.
Like if the person is having multiple businesses, then is it necessary कि एक ही tax auditor होना चाहिए बाकी सबके लिए? क्योंकि
Not necessary, sir. Not necessary.
तो सर report क्या बार-बार हर एक report को एक ही बार submit कर सकता हूँ?
Again, guidance note is very clear on this, sir. I can say there is a business in Calcutta, another business is in Indore. So for Calcutta business, he can get it audited by you. Indore, I can do the audit. Ultimately, one single audit report is to be uploaded. So then he has to appoint one auditor as a say consolidation purposes audit.
Well, yes, for consolidation purpose, one auditor has to be there.
Yes. So that person, that auditor would be uploading the audit report.
Income tax side के अंदर में जो हम auditor का नाम रखेंगे, जो consolidated audit कर रहा है उसका नाम लिखेंगे.
Yes.
तो consolidated audit में balance sheet भी consolidated जाएगी कि single balance sheet जाएगी?
Consolidated जाएगी ना सर, सारी चीजें consolidated जाएंगी. So probably the more appropriate way would be treating one business as head office, another as branch. So like it happens in case of banks. all these branch auditor report and everything get consolidated at head office level, and only single report gets uploaded.
Same auditor, then he can only consolidate the audit report. There is no need to consolidate the balance sheet then.
No, but then what is required, sir? Again, for income tax purposes, the income tax return is of the assessee as a whole. The tax audit is of the assessee as a whole. So as an income tax officer, I am looking for your consolidated position. This is your total turnover.
If there is the same auditor, he can go for consolidated tax audit in respect of all the businesses. I think that will be sufficient.
Yeah, then that would be suggestible also. Why to prepare separate balance sheet? He can have one single balance sheet and upload it. But if there are 2 or 3 different auditors, one has to take the pains of consolidating. Okay. Then, sir, let's come to the second aspect, that is actual reporting. Certain issues, certain precautions, I would say, one must take with respect to this whole Form 3CD reporting, sir. Okay. What has happened? Institute has actually formed a tax quality review board. I happen to be one of the member of that particular board also. CBDT keeps on sending, say, many issues to the institute, pointing out some glaring omissions, some glaring mistakes committed by the auditors in that Form 3CD. So some of those issues I would just like to share with this gathering. Some precautions, some clarity related with this various aspects of certain important aspects of Form 3CD. And the very first thing, there are some might be some very small issues also, but still it is worth having us a clarity on these various aspects. So now we have this part A, clause 4, okay, which requires indirect tax registration number to be mentioned. Goes without saying, if a assessee is registered in more than one state, then all these GSTN are required to be reported in my part A. Professional tax is not an indirect tax. I'm not very sure about Bengal, whether you have a concept of professional tax or not, but various other states, they do have a professional tax, which is levied by state government. So normal common sense understanding is this, because it's a state government levy. So this is also professional tax. And at least in our state, professional tax is also managed by GST department, by the state GST department. But going by the nature, professional tax is not an indirect tax. So that is not required to be reported. The GST and all GST, that is required to be reported in this clause 4.
सर इसमें एक क्वेरी था मेरा
जी
कि अगर से कोई एसएससी का पुराना सेल टैक्स का केस, जैसे स्टेट सेल टैक्स या सेंट्रल सेल टैक्स या सर्विस टैक्स का केसेस चल रहे हैं, उस केस में whether it is required to give those registration numbers.
So there is no harm in reporting, first of all. If you have all these details available, you report it, then there is no harm in reporting. Legal view might be this, that all these acts are no more applicable. The assessee is actually now having only one registration, that is GST. All those service tax, VAT registration were under the earlier regime. So even if you don't report it, you are not violating anything. You are not doing anything wrong. But there is no harm in reporting. Okay. Now coming to this ICDS disclosure, sir. CBDT has got a very strong reservation about this ICDS disclosure, and they have pointed out very categorically that in number of tax audit report, what is mentioned is as per notes to the accounts. In compliance of all these ICDS disclosures, simply it is as per notes to the accounts. Certain ICDS may not be applicable to that particular assessee. For example, ICDS with respect to construction contract. Now, assessee is a trader in grains. There is nothing to do with the construction contract. So instead of writing this ICDS is not applicable, there also it has been copy pasted as per notes to the accounts. There may not be any notes to the accounts at all. In case of companies, there might be notes to the accounts. In case of individual partnership firm, there may not be any notes to the accounts at all. But still in 3CD, it is being mentioned that it is as per notes to the accounts. So very humble request to all the fellow professionals is this. If we are also following this kind of practice, sir, please avoid it. So please shun this particular way of reporting. What is required is with respect to ICDS, you need to give the disclosure. that for each aspect of ICDS, what is the accounting policy is being followed with respect to borrowing cost, what is the accounting policy with respect to government grants, what is the accounting policy. So probably a standard reply can be drafted, a template kind of thing can be drafted, and then that can be, say, used in every kind of CCD. So rather than simply saying, as per the notes to the accounts, the efforts are required to be given to give some kind of disclosure. Plain simple accounting policy is required to be disclosed. Revenue recognition. So what is the accounting policy for revenue recognition? One or two sentences are required to be given. So some sort of a standard reply can be drafted in the office, and that standard reply can be used. And I'm sure for majority of clients, the same kind of, say, reply would suffice. But still, so one-time pains kind of thing may be taken rather than simply saying as per notes to the accounts. And in fact, if we want to write this as per notes to the accounts, it would always be advisable to refer number of that particular note. In case of company balance sheets, there will always be notes to the accounts. So probably we can refer note number as per note number 4, disclosure of significant accounting policy in the balance sheet, something like this. So which should convey an idea that a proper effort has been given with respect to this ICDS disclosure. It is not being done simply as a formality, but some sincere efforts have been done by the tax auditor with respect to this clause 13F ICDS disclosure. Now, this is what is the particular clause number 16D. Any other item of income which is probably creating whole lot of problems for number of professionals with respect to our last year reporting. In number of cases, whatever has been mentioned in this clause 16D, any other item of income, CPC software has simply taken it as the amount which is required to be added to the taxable income, and they have simply added it to my income, despite of the fact that assessee might have already added this particular income as part of his income from other sources or something like this. Say, for example, savings bank interest, which assessee might have credited directly in his capital account. While finalizing my 3CD reporting, I have dutifully reported that savings bank interest as under this particular clause 16D. And then while finalizing computation of income, I have added that savings bank interest as income from other sources, which is the correct way of, say, computation. But still, what CPC has done, CPC have simply said that you have disclosed this much amount as any other income in Form 3CD. We feel that we are not able to find out this amount has been added to your income under your income tax return, and they have made the addition, issued that 143(1) notices. People have applied for rectification of mistake 154. No relief given by CPC. In certain cases, auditors have say ultimately revised their tax audit report, which I feel was not a correct thing to do, but ultimately there was no solution available. So they have revised their tax audit report, and all sorts of problems have happened. In some cases, appeals have been filed for some small issues, some small amount, but still appeals have to be filed, adding to the overall pains of my assignment of now arguing before in the appeals and all those issues. The point is this: whatever items are to be reported in this clause 16D, any other item of income, again, we need to follow the CPC processing logic, the whole ITR logic, this whole computerized way of working. That logic we have to follow, because all these processing, we know it is happening through system only. So whatever logic has been fed in the system, that logic will prevail. You file rectification application, that will also be processed by software itself through that particular logic. So that logic will prevail in any case. If you want to go for the legal interpretation, you want to go for the factual proposition, the only option available is the appeal. At CPC level, if you violate their logic, you cannot expect any relief. So the point is this: with respect to the 16D reporting, what kind of logic they are following? They are saying that whatever has been reported in tax audit report, first of all, in the income tax return, it should be a part of my other information, part A, other information schedule. Whatever is being reported in clause 16D, it should get a mirror image. It should get reflected in other information schedule. From other information schedule, it should come to your schedule BP, that is business profession. So for example, I have reported 15,000 rupees savings bank interest as part of my clause 16D. Assessee has credited this much amount to their capital account directly. So dutifully, as a tax auditor, I have reported it in my clause 16D. As a tax auditor, I have done my job properly, correctly. But the problem is this: when I start preparing ITR of the same client, this 15,000 savings bank interest as reported in clause 16D, I should have taken it to my OI schedule. From OI schedule, I should have brought it down to business profession schedule. Then from business profession schedule, if I want to ultimately report it as part of my income from other sources, so first adding it to my business income, then I have to reduce it from business income under the heading that any other income taxable is income from other sources, and then I need to take it to income from other sources. Mano ya na mano, sir, you like it or not, but this is how the things are working. You have reported in a tax audit report and then taken it directly to income from other sources. The CPC software is looking for that particular figure in your OI schedule, in your schedule BP. There, this figure is not available. That software is not finding the figure in these particular places. It might have been there in income from other sources. The computer has no brains. Computer has nothing to do what you have reported anywhere else. Whatever should have been reported here, whether you have reported at the very same point or not. You might have reported the same amount anywhere else that Commissioner Appeal would see when he will be able to see the physically all the documents. Computer will not be able to see. So the point I'm trying to make, whenever you are we need to have a very good understanding about this whole processing logic also, how the information flow is happening within the CPC parameters. So anything which is being reported in tax audit report, the CPC softwares are looking for the same figure in your OI schedule of ITR. Whatever is being mentioned in OI schedule, the CPC software is looking exactly for the same figure in your business profession schedule. Once it is there in BP schedule, the software is satisfied. Then you reduce the same amount from business income and then add it to income from other sources. That is your choice. So this is what is a very, very important precaution. Last year, many of us have committed that particular mistake. We simply thought it has been reported there in 16D and it has been added as income from other sources. So it's okay. But then the whole processing logic has created a problem. So this year, at least, we need to follow, we need to ensure that strictly the sequence is followed. Any other item of income, clause 16D. Okay. Now, another important clause is this clause 18, depreciation, that the basic clarity we all have, the basic format, basic structure we all understand. And the one or two precautions which are needed probably with respect to the depreciation. Sometimes it has been observed, it has been pointed out that opening WDV doesn't match with the last year's closing WDV. Software may not be taking this figure directly, whatever software I'm using. Sometimes software may goof up, it may not have taken the figure directly. The feeding might have been done manually by my article, and my article probably has used 1920 data for say opening balances in the current year. So for financial year 21-22, opening balances are now the closing balance which were there in 1920. The articles have their own way of working. So all sorts of possibilities are there. So very basic check kind of thing which is needed, because this figure is not coming from the accounting data. Okay, the income tax WDV is very clearly, we understand, is not coming from the accounting data. It is coming from my own system itself. Whatever software I'm using, that software is transferring the figures. Last year's closing WDV, it is converting it into current year's opening WDV. Because of certain reasons, software might malfunction, software might have a problem somewhere. There might be some process required to carry forward the data in my software. That process may not have been done. Some problem may be there. So it is always advisable to at least have the small check that whatever is my opening WDV, that matches with the closing WDV of the last year's figure. So in our office, at least, we have got this particular check involved in our checklist. The audit report as filed on the portal, that needs to be downloaded. We even don't see the audit report is available in my system, because I'm not very sure which version is stored in my particular system, in my software, what by my computer folder, which version of the audit file is saved. I'm not very sure. So whatever has been filed online, that file needs to be downloaded. And in that last year's PCD, whatever closing balance has been mentioned, I need to make sure that the same figure is my current year's opening WDV. Sometimes somebody is claiming this section 35 deduction with respect to scientific research capital expenditure. So these all are basic precautions we need to take, that capital expenditure for which deduction is to be taken under section 35, that should not become part of my depreciation calculation. Okay, this is a small precaution we need to take. Something more on this depreciation part, some legal interpretational issues actually. The date put to use, particularly when the actual date put to use is somewhere near September, that 180 days criteria start hitting. So I need to see at least those particular transactions little bit carefully. Rather than solely relying on the article, probably I would like to review at least these particular transactions which are happening somewhere nearby month of September. A very interesting legal aspect related with this, that the depreciation I can start claiming from the date asset has been put to use. So now what exactly is the date of put to use? Date of actual use or date of ready to be used? We all know, judiciary has said it again and again, that whenever the asset was in a ready to be used situation, from that would be the date from which the depreciation calculation will start. So my 180 days time period has to be seen with respect to the date ready to be used. Now with respect to the ready to be used, a very interesting aspect is this: when I will say my asset was actually ready to be used situation, physical readiness or legal readiness. Courts have said that asset must be in a ready to be used situation from a legal perspective also. Then only you can say it was in a ready to be used situation. Very simply, for example, purchase of a vehicle, purchase of a motor. My actual purchase has happened on 26th of September. So now it is more than 180 days. From counting from 26th of September, it is more than 180 days. The vehicle registration, the RTO registration has taken place somewhere on 6th of October. Very strictly speaking, sir, the depreciation cannot be claimed for full year. It has to be for half of the year, because legally that vehicle was ready to be used only on 6th of October, not on the date of purchase, but on the date of RTO registration. I cannot use that vehicle unless and until I have got a number plate, unless and until I have got that RTO registration. I cannot use it for my business. The temporary registration is there, that is only for taking that vehicle from shop to my house, to my office. But use for the purpose of business would start only when that legal readiness is there. So just a small interpretational issue. What exactly is the date put to use when the asset is physically ready to be used, as well as it is legally ready to be used? A lift has been installed in the building. Now, in number of cities, and I'm sure it must be there in Calcutta also, before starting using that particular lift, one needs to take NOC from the fire department, from the electricity department. So lift might have been installed, somebody might have started using it, but the legal readiness would be there only when that NOC has been taken. So probably that date should be the date of put to use of that particular asset. Interpretation. Okay.
Sir, one
Now,
thing I would like to know here, so far as filling up the forms in relation to addition is concerned, say if there are multiple additions throughout the year, there are so many additions of a single head of expense, like furniture pictures. There may be several additions throughout the whole day. Maybe for a specific एक जगह जहाँ पर furniture बन रहा वहाँ का ये individual items हैं. If the individual items ready for use is there, then it's okay. But if it is the multiple items which has been purchased for a common for getting say some showroom getting ready. So what should we give the individual date-wise acquisition or the when the assets when the showroom was ready to use and whatever expenses we have incurred for furniture and pictures to be clubbed together and we can show it.
so strictly speaking, if the example you are taking, if so for example, it's a new showroom which is being developed. So the date of use of all the furniture item would be actually the date of inauguration of that particular showroom.
Yes, correct.
Might
But
have
so far as
purchased it
individual
earlier.
purchase is concerned, we need to give the individual item wise. We can club together and give it.
No, that is the date of purchase, but CCD is requiring date of use.
Okay.
From which date you have actually put to use that particular item,
No,
that date is to be given.
CCD, both the dates are there. Both the dates are there.
Okay.
If you go to the CCD, both the dates. But I think we can club because if there are thousands of transactions, how to report it?
Definitely. So ultimately, a practical view can always be taken. Say, for example, if all the items you might have purchased on different dates, but all the items are falling before that 30th of September. So you can always take a practical view. That ultimate idea is to ensure 100% appreciation or 50% appreciation. So that purpose is served, you can always club, no problem.
क्योंकि ये कंस्ट्रक्शन में भी अगर आप ऑफिस परचेज की है या समझिए कोई बिल्डिंग कंस्ट्रक्ट कर रहे हैं वहां पर भी सेम इशू आ जाता है.
Possible, sir. Sandeep Agrawal ji is having an interesting query. Vehicle purchased on 30th March, but RTO registration on 5th of April. Where to show this asset? So where to show this asset for accounting purposes, balance sheet purposes, different. But so far as income tax is concerned, I am very clear that on this vehicle, you cannot claim the depreciation in the current year. If 5th April is your RTO registration date, the depreciation calculation would start next year only. Current year, you are not entitled to claim any depreciation. The asset was not in a ready to be used situation, legally speaking. Okay. Now coming to this clause 20B, employees' contribution to Provident Fund ESIC. Now we all know there is another controversy which is going on with respect to this whole employee contribution to Provident Fund, whether paid before the due date as per the relevant act or whether paid before the ITR due date. Now earlier Supreme Court was clearly on record that employee contribution is also, if paid before the due date of ITR, the deduction is available. Now they have amended the law very clearly, and now they are saying that employee contribution only when it has been paid up to the due date as per PF Act, as per ESIC Act, then only deduction would be available. Employer contribution, even if paid up to the ITR due date, deduction can be claimed, but employee contribution, it has to be by that 15th of next month, January. Now, sometimes a mistake gets committed that what gets reported in 20 clause B is the total amount, employee contribution plus employer contribution, the total amount gets reported. And in that case, if the payment is delayed by 1 or 2 days, the total amount would get disallowed. What is required to be reported with respect to 20 clause B is only the employee's contribution. So again, my article who is doing all these feeding, he or she needs to be instructed very clearly that what happens practically. These all are situations practically in your office and my office, and in all the cases, client sends the copy of challans of all the Provident Fund, and then articles start feeding the amount from that particular challan. Now challan is for the total amount, employee contribution as well as employer contribution. what is to be reported in 50 clause B is only the employee contribution, because if there is a disallowance, if there is a delayed payment, disallowance would be there. If I report the total amount, then the total disallowance would be there. If I report what is required is only employee's contribution. So delayed deposit disallowance would be restricted to employee's contribution in that particular case. This is a small point with respect to this clause 20B. Then this is clause 21A, capital items debited to profit and loss account. A simple audit procedure is required to be performed, what all are the different heads where there is a possibility of some capital item might get debited. The point which I'm trying to make is this: if I do report something here, if I found by analyzing say legal and professional charges that some expenditure is related with the acquisition of an asset, repairs and maintenance, I do feel that there are certain expenditure which qualify to be capital expenditure. So I'm reporting these items in clause 21A. A small point, additional precaution I would suggest in this particular case: if I'm reporting something as capital items debited to P&L account, I need to make sure that now client at least get a depreciation with respect to these amounts. He has debited it to P&L account. He has not capitalized it. That's why I'm reporting it. But since I'm reporting it as a capital item debited to P&L account, this will get disallowed. Now it should be part of my fixed assets, and then client should at least get depreciation on it. So whatever items are being reported in clause 21A, it is advisable to make sure that the same amount at least gets added to the say fixed assets acquired during the year. So at least the depreciation is available in that particular case. You're absolutely right, sir, with respect to insurance. Mr. Banerjee is pointing out with respect to insurance. Absolutely right. This happens with respect to insurance. Okay. So capital items debited to profit and loss account. Fine. With respect to this personal expenses debited to P&L, again clause 21A, a very small clarification again is there. With respect to the companies, there are lots and lots of decisions from all across the country. All tribunals, high courts are unanimous on this particular point, that with respect to the company, there cannot be anything called personal expenditure. Any payment, even if it is for the personal benefit of employee or director, that is perquisite in their hands. But so far as company is concerned, there can never be a question of any personal expenditure. So probably nothing is to be reported with respect to company in respect of personal expenditure debited to P&L account. Okay. Another one small issue with respect to expenditure on fine or penalty, etc. What is required to be seen is what is the nature of penalty, whether it is a legal penalty or it is a contractual penalty. Because the problem is this: the moment you report anything in your tax audit report, now because of that computerized processing, this is going to be disallowed. Either you disallow on your own, or otherwise CPC would disallow it. Okay. So what exactly is disallowed on account of fine or penalty, etc.? Supreme Court has made it very, very clear that what you need to see is the contractual obligation versus a penal obligation. Okay. Any contractual obligation, even if it has been named as a penalty, but this is not a penalty which requires a reporting in clause 21A. There was a delayed delivery kind of thing, and because of delayed delivery, due to that agreement, some penalty had to be paid to the customer, but that is a contractual obligation. That is not a penalty. No disallowance is warranted, so nothing is required to be reported in that particular case. Only when there is a penalty, there is a fine with respect to violation of a law, then that requires a disallowance, and that needs to be reported. Now, in that context, again, there is an issue with respect to this late filing fees. For GST return late filing, you have to pay a fees. For TDS return late filing, you have to pay a fees. So whether that fees is required to be reported here. Now the point is this, that law itself, that GST law, that income tax law itself is treating it as a fees. It is not a penalty. They are levying a fees on the assessee because you are filing it with a delay. So we are simply levying a fees on you, but there is no penalty. Had it been a penalty, then it would have been subjected to reasonable clause. Then it would not be mandatory. Late filing fees is mandatory. Had it been penalty, then this would not have been mandatory. I would have been allowed to argue the relief from that late payment fees based on reasonable cost kind of thing. All these arguments are not possible because it has been levied as a fees. So now since it is being levied as a fees, very clearly it is not a penalty, not a fine. So no required to report and then disallow this late filing fees for GST return, late filing fees for TDS returns. Interest for late payment, that is very clearly disallowed. There are, say, court decisions also on this. But the fees paid for late filing of GST return, TDS return, not a penalty, not required to be reported here. Okay, fine. I think after this, probably looking towards the time availability, we can straight come to that new section of 44, clause 44, which will require some sort of discussion, and probably after this we can take certain queries from the members also. Okay. What is actually different from in this year's tax audit as compared to all earlier years tax audit, that is this new clause 44, GST based classification of expenditure. Okay, a clause about which still the profession is not having a unanimous view as to how to deal with this particular situation. Calcutta, probably you might be having a different view about it. In Indore, we are having a different view. In Bombay, I discussed, they are handling it, certain people handling in A manner, certain handling in B manner. So there's still a whole lot of confusion, difference of opinion going on, despite of ICI coming out with a guidance note, giving a guidance there also, but still professionals are having all different ways. Very first thing, first of all, this clause 44 is applicable from this year. This also we realize very late. It has been introduced in form 3CD 2-3 years back. Then by virtue of a notification, they have kept it on hold. And the notification which has deferred the applicability, that has been designed in such a manner so as to create a good amount of confusion. But then ultimately, we all come to a conclusion that this clause 44 is applicable from this assessment year itself. AY 22-23, clause 44 is applicable. That is one thing is sure. Now, the problem with clause 44 is this, it is asking me classification of expenditure based on GST. So first of all, what is the requirement of this clause 44? Let's have a quick view about it. This is giving me a table, and in that table, there are, say, 6-7 columns are there where I need to fill different data. Column 2 is asking about total amount of expenditure. The word used there is expenditure, that I need to report total amount of expenditure. Then in the next 3, 4, 5, 6, next 4 columns, I have to give detail in respect of expenditure entities registered under GST. So all these expenditure where the receiver, the payee, is an entity registered under GST, these details are to be given, again classified into 4 different categories relating to goods or services exempt from GST. This is column number 3. Composition scheme dealer, column number 4. Other registered entities, column number 5. And 6 is having a total of 3, 4, 5. And then expenditure relating to entities not registered under GST, that is to be given in column 7. So this is what is the clause 44. This is what all are the information which they are asking. Now, very first thing, we are not very sure what is the purpose of asking this information in the tax audit. Second is, somewhere we are scared also somehow. We are not aware how CPC would be processing this whole particular data. what kind of inference they would be drawing based on whatever data we are reporting. So number of say questions are there, number of say a number of say apprehension is there in the mind of professionals. I'm getting probably at least 5 queries daily about this particular issue only. So lot many apprehensions are being expressed, why this information is being asked, how they will be processing it. So all sorts of issues are there. Now the point is this: what as a professional may be my response to this whole new clause 44? So based on my interaction with the professional, based on say what institute has proposed in guidance note, and say overall the situation, what is happening by and large, how to respond, how to deal with this clause 44, there are 3 different options which are coming up. 3 different options based on my interaction with not many professionals. What I found that these are 3 different views which are there. One school of thought is this, that I should not report anything. Okay, not report anything and simply give a disclaimer. And I'm very sure lot many formats of that disclaimer must have reached to each one of you, that WhatsApp University is always there, giving all sorts of yarn to us. So different kind of say clauses people have drafted, and then they have simply circulated it. So it is available. So this information is not maintained by the assessee. Software of assessee is not capable of generating this much data. So we are not able to give any information at this particular point. This one view is there, which is saying report 0. Simply leave it blank and then give a detailed disclaimer. That is one option. Second extreme is something like this, that develop a detailed analysis of every kind of expenditure, detailed classification, which one is a payment to composition scheme dealer, which one is to the registered, which one is exempted payment, which one is to unregistered. A complete detailed classification is to be done, and accordingly reporting is to be done. That's accepted very frankly within the closed door, not to be quoted anywhere else. All said and done, come what may, this much detailing may not be possible, considering the time constant, and more importantly, considering the remuneration constant also. For doing all these kind of jugglery, all these kind of exercise, let's accept it within our home, that I may not be remunerated that much by the client, which will be justifying this much kind of detailed discussion, detailed analysis. And in any case, that the detailed analysis, exactly 100% correct kind of analysis may not be possible because data would not be available. So third view, which is now emerging, and then say slowly and gradually, many people are subscribing to this particular view, that details may be reported to the extent information available. By and large kind of view can be formed, a broad view kind of thing can be formed, considering the aspect of materiality and everything. The data may be compiled in such a manner which does not take much of the time, and then which broadly gives a correct indication, which broadly gives a correct picture, along with a suitable clarification. This broadly accurate data kind of thing which can be reported. Now, what will be the broadly accurate data? This itself will have a whole lot of debate. But still, using our professional expertise in accountancy, our understanding about GST, I'm sure we all can come out with some kind of a methodology which helps us to generate a data which is broadly accurate, and then along with a suitable disclaimer, I can think of giving that particular information. Okay, yeah. So we need to spend some more time on this. So now the point is this: if I decide to report ultimately, if I decide I don't go by the first view of say not giving anything and simply giving a disclaimer, which I also personally feel would be not a correct view. So if I decide to go for say reporting something, then there are certain issues which I need to keep in mind. The very first thing, and this is query already in the chat box, the total expenditure shall include capital expenditure also. Very clearly, no doubt about it. ICAI guidance note is there, and even the general law of interpretation would also suggest, because what we are asking is the total amount of expenditure. So expenditure always includes revenue expenditure as well as capital expenditure also. We may call it as a capital asset, but ultimately it is an expenditure, the capital expenditure. So very first thing, total expenditure shall include capital expenditure also. Second is, now there are certain debits to P&L which may not qualify as an expenditure, which may not answer to the definition of expenditure. For example, depreciation. Since capital expenditure are getting included in the total expenditure, so otherwise also depreciation needs to be kept out, and depreciation is not an expenditure in any case. Similarly, bad debts written off, foreign exchange fluctuation, some these kind of say debits to the P&L account, which are actually debited to P&L, but not an expenditure. The clause 44 is nowhere asking me about debit to P&L account. It is asking me about expenditure. So capital expenditure not debited to P&L, but still should be part of expenditure. Depreciation, bad debts, etc., though debited to P&L, but they are not expenditure as such. So they needs to be excluded. They should not form part of my total expenditure. That column 2 figure itself, these items needs to be taken out. So this is about my column 2, the first figure, the total expenditure, including capital expenditure, excluding certain items. Now we come to the second part of clause 44, expenditure to registered entities, bifurcated into exempted and then this composition and other. So with respect to this exempted supplies, again, broadly looking to the P&L account itself, I can identify certain supplies which are exempt, so which can go into my column 3, like all my finance cost, all my bank interest, that is my exempted supply. All petrol, diesel expenses, which are obvious in most of the cases, we will be having a separate head for these expenditure in my P&L account, in my tally. So these figures can be taken directly from a total of that ledger can be taken. Bank interest, petrol, diesel, even exempted supplies include non-taxable supplies also. ICAI has made it very clear. So petrol, diesel are non-taxable supply. They will also qualify as exempted supply for this reporting purposes. Now, very big problem is with respect to the composition dealer. Let's accept it very frankly, come what may, this information never going to be available. Whether the receiver, the pay, the supplier, whether he was a composition dealer or not, no way this information would be available. So probably I can think of leaving this particular column blank with a suitable kind of remark. That for all those dealer where details of say GST is not available, so it has been treated as a supply by unregistered dealers, something like this. No way this information would be available. So probably we can leave it blank with a suitable clarification. Now coming to column number 5, expenditure relating to other registered entities other than this composition dealer, other registered entities. A broad figure for this particular column would be available in GSTR 2A. May not be accurate, may not be 100% correct, may not be absolutely correct, but still a broad figure would be available in my GSTR 2A, that this much is the expenditure relating to other registered entities. So this will be my registered entities column 3, column 4, and column 5. Column 3 figure, that is exempted supplies, I can take out from my P&L account. Column 4, probably we may leave it blank. Column 5, we can take the figure from GSTR 2A. And then whatever is my balancing figure, my total expenditure is there in column 2. Registered entity details we have considered here. Whatever is my balancing figure, all may go into column 7, expenditure relating to entities not registered. So all of my balancing figure, everything can go into my column 7 with a suitable disclaimer, with a suitable clarification coming in my 3CA or 3CB, probably this kind of a methodology which we can follow. Now, there are still number of questions which are there. A question which has already been asked in the chat box. What is to be done with respect to what is to be done with respect to salary payments? Some noise is there, sir. Yeah, with respect to this whole salary payments, there is already a debate going on. ICI has suggested that this remuneration to employee need not be reported as this is not a supply. My humble submission is this: the clause 44 is nowhere using the word supply. So when they are talking about income tax, they are not exactly going into the nitty-gritties of GST, what is a supply, what is not a supply. They are asking about expenditure. So for all practical purposes, salary is an expenditure. And it is an expenditure relating to entities not registered under GST. So going by the language of clause 44, salary is very clearly column 7 item. Whatever is heading of that particular column 7, that expenditure relating to entities not registered under GST. So very clearly, salary is an expenditure. The person to whom I'm making this payment, I'm paying this expenditure, is an entity not registered under GST. So my personal opinion is this, that salary has to be part of my reporting, and it should go into my column 7. If I don't report it here, if I don't report salary in column 7, probably I need to exclude it even for column 2 also. If I make it a part of my total expenditure, but then the total figure does not tally, I'm not very sure how CPC would be reviewing it. They may say your internal figures are not reconciling, so there is a defect in your return or some kind of problem is there. So I feel there is no harm in reporting salary also as part of my column 7. I don't report it in column 2 itself. That is another option available. Now I face a practical problem. We are having a client as an IT company, 100 crores expenditure. Out of this 100 crores, 95 crores is the salary payment. So I exclude a salary even for column 2 also. So my total reporting becomes very, very small. Against 100 crores total expenditure in P&L, I would be reporting only 3, 4, 5 crores in column 2. So that may, again, I'm not very sure how it may be taken, how it may be viewed by CPC in this particular case. So my submission is this, and this is what we are following in our office also. Salary is an expenditure relating to entities not registered under GST, may not be a supply, but rather than not reporting it and then taking a risk of explaining all these GST to the income tax officer, they have a difficulty in understanding their own act itself. I'm not very sure how much comfortable they would be in understanding GST. So rather than taking a risk of not reporting it and then a query being raised and then I explaining them salary is not a supply, this is the definition of supply in GST, I personally would prefer reporting the salary also as a part of my column 7, expenditure relating to entities not registered under GST. Another question related with this, whether expenditure has to be given on a head-wise basis or the consolidated figure can be given. Absolutely clear thought process from my side. It has to be consolidated. No need of doing all these hammali, all these hard work of giving all these item by item kind of detail. They are not asking it. So keep a working ready with you. In your Excel file, the working should be there, how you have arrived at particular figure. But give a total figure. This is what probably ICI is also suggesting in their guidance note. So no need of giving any item wise figure. Okay. Okay. So Pranab Ghoshji is having query: if supplier issue GST invoice, but either does not submit return or submit return showing that sale is unregistered, whether that purchase will be shown in column 5 or column 7. Strictly speaking, sir, for you, this is a payment to a registered entity, so it should be column 5 figure. The problem is this: if the say transactions are fairly large, you may not be able to get this much item by item kind of detail. But probably you would like to go by whatever has been reported as GSTR 2A as your column 5 figure, and column 7 coming as a balancing figure. This is a more practical approach what we can follow, because we are discussing in-house, sir. Had this been a say seminar by the income tax department, then probably answer would be do a detailed analysis of every transaction and report according to the nature of transaction. Considering the practical scenario, probably column 5 should correspond with whatever is there in my GSTR 2A, and column 7 might be a balancing figure.
But see, here my view is, if the client makes a proper reconciliation of the accounts versus 2A, and if he can identify that these are the expenses which has been incurred and for which in 2A it is not appearing, and he has the valid tax invoice, I think it can be included there under.
Certainly, sir. Certainly, the data is available. Certain expenditure which are payment to registered entity but not appearing in 2A. In my reporting, it should be column 5 figure. But the whole problem is, that's why I suggest then the disclaimer should also be there, saying that data in clause 44 has been verified to the extent information available in the client's accounting system. If
the
he does not have
challenge in this table is the finding the entities falling under composition scheme, because it is very difficult to find.
Next to impossible, sir. Let's accept very frankly.
Even in a small organization, it will be difficult, sir. जब बड़ी organization होगी तो उसपे तो बात क्या लगा? छोटी organization में 25-50 करोड़ के turnover वाले organization में भी जो है निकाल पाना मुश्किल है.
Yes. So the only option available is to leave it blank, give a disclaimer, give a clarification for this. So, sir, this is what is about clause 44. I must say, whatever I have mentioned here may not be the final word. There might be some more clarities coming up. There is already a talk about getting this clause 44 scrapped also. I doubt that this will be removed, this will be deleted. The whole government officers are so hungry about data that once they have started demanding a data, they are not going to go back on that particular aspect. So it is going to be there. And that's why I say, if we want to give a disclaimer, there is a view that we should give a disclaimer. So my only question is this: how long we will continue giving this particular disclaimer? This question would be there next year also, next to next year also. You cannot simply disclaim every year that data is not available. So probably you need to prepare yourself mentally that that disclosure has to be given. To what extent you would like to go for the accuracy in that particular disclosure, that's a professional question you can address individually also.
So, okay. Isme client has to produce the books of accounts to our satisfaction. If the client does not maintain the books of accounts to capture the data relating to a composition scheme, yes, how can we have to give the disclaimer only?
I agree with you, sir. I agree with you. We can always take that particular stand that some client is not giving the data, so information has not been given. But again, considering the practical scenarios, sir, because we all come from the same family, so we all understand, sir, how much data is actually given by the client and how much is developed by us. So I'm talking from that.
One more thing, taking data only from the 2A is also not advisable. क्योंकि 2A के अंदर में लास्ट ईयर के भी डाटा बहुत बार आते हैं, से मार्च की सप्लाई है वो भी आती है, तो दैट हैज टू बी एक्सक्लूडेड आल्सो. So this cannot be taken. I fully agree with you, sir.
I fully agree. मतलब it cannot be a simple copy paste kind of thing. A basic analysis has to be done. The only question is within the time constant and the financial constant.
It's very difficult. It's very difficult.
हमारे लिए वो ज्यादा बड़ी बात है सर. मेहनत तो हम सब करने को तैयार है. Given the time, हम वो मतलब composition की डिटेल भी हम निकाल देंगे. But पैसा मिलेगा क्या उसका?
The preparation of this clause itself is equal to tax audit. One tax audit. Absolutely. We are beyond that.
So that's why, sir, very humbly speaking, this whole 3CD related discussion, when you do for the persons who are big four auditors, then probably there is a different dimension of this whole discussion. Or for say SMPs like all of us, this 3CD has got altogether different dimensions. We have to accept it. For all big four clients, we can always say कि सब client निकाल के देगा और हम verify करेंगे, and all those things जो institute suggest करती है. Ground realities हम सबके लिए अलग है. We all know this.
So should we start the question answer session now, because now it's already 7:10.
Yes, sir.
7:05.
Yes. So this is all from my side, sir.
नहीं, आपने तो सर काफी
I just want to
extensively
highlight one particular thing, sir, just to end this whole discussion. The problem with all of us, including me and all of us, when I'm doing a tax audit, I probably need to have a clarity what exactly I'm doing. And this is where the things get muddy, things get confused. Every tax auditor should start asking a question to himself: who am I? मैं कौन हूँ सर? जब मैं tax audit कर रहा हूँ, what exactly I am doing? Whether I am an auditor, whether I am an accountant, whether I am a tax consultant, whether I am a data entry operator, whether I am an assessing officer, who am I? The whole problem with this tax audit assignment is because of this lack of clarity. We have to do everything. Unfortunately, we cannot simply put ourselves into the shoes of auditor. I have to do all these activities. And that's why I think I have started with the superhuman auditor approach. That I'm doing all these, juggling all these balls at the same time in one single assignment. But unfortunately, this is what is the reality of my tax audit assignment. Okay, sir. So thanks a lot for giving me this opportunity. It is always a pleasure to interact with the learned professional community of Calcutta. I learn a lot in that whole process, sir. So thank you very much. I think we can have some quick question answer.
Yeah, some question. If there is any question from the audience, I will request them to please ask it themselves by unmuting themselves, or I have some queries which I will like to ask at the end. But before that, I would like to give the opportunity to all the delegates, because they are more important.
So I'll be sending PPT to you. There are not many requests in this chat box.
No issue.
Yeah, I'll be sending link to you, sir.
Sir, मुझे लगता है कोई query नहीं, मैं कुछ query आपसे करना चाहूँगा. Number one is about the revision of the tax audit. Under what circumstances the tax audit should be revised?
So legally speaking, there is no say specific criteria mentioned for the revision. So probably it can be revised within the say four corners of professional ethics issues. But like income tax return revision, we have a specific criteria 139(5) omission or discovery of any mistake or omission therein. There is nothing like this for tax audit.
So if in the filing the tax audit report, by mistake wrong section under which tax audit has been completed has been stated.
Yeah.
इसका कुछ impact हो सकता है on the
as such तो कोई impact नहीं है sir. As such तो कोई impact नहीं है. By and large my 3CD is same. Whatever is the reason, 3CD is same. So information जो मैं दे रहा हूँ वो तो सारी जा ही रही है. It's more to say technical error kind of thing, but not having any serious impact. Not having any serious impact.
Tax audit cannot be rejected on this technical matter.
No, there is no logic of getting it rejected.
That I understand. Simply क्योंकि इस टाइप के errors होती है, बहुत जगह हम लोग देखते हैं. इसलिए मैं कई बार पूछता हूँ मैं. I'm simply, this is for the more for the benefit of the audience कि अगर कितनी का ऐसा ही इशू है तो. Sir, एक ICDS के ऊपर में था valuation of inventory. Again, this is a very cumbersome thing because they ask us to compute under inclusive method of account this thing. And to compute in case of large organizations, various variety of the business segments.
So unfortunately, that is to be done. ICI guidance note also suggests doing a calculation out of the box. Ultimately, that whole reconciliation needs to be prepared, sir.
But generally, in the tax audit, you will see the people say this generally it is accounted for under the exclusive system of accounting, and however there is no deviation in the ये कोई कैलकुलेशन देता नहीं टैक्स ऑडिट. आई डोंट नो हाउ मेनी पर्संस गिव दिस.
नहीं देता नहीं है सर. अभी तक सीपीसी ने भी कोई स्टैंड लिया नहीं है उस पे. हां, याद ओके.
लेकिन एक आध तो स्क्रूटनी के अंदर भी इस टाइप के क्वेश्चंस उठाई भी उन्होंने कि यू प्लीज शो अस हाउ दिस इज. लेकिन है बड़ा कम्बरसम. ठीक है
सर, बड़ा कम्बरसम है वो
सर. एक है आइटम नंबर सेक्शन 28 के अंदर में अभी 194R के बाद में इसका इंपॉर्टेंस बढ़ गया है
जी
कि any other perquisites, any items falling within the scope of 28. तो 28 के अंदर में 28(4) जो है, जो perquisites and benefit of perquisite arising out of profession, इसके कहीं अकाउंटिंग होती नहीं. हाउ टू इसमें report, because this is going to have some
सर वो अगले साल से तो अपने आप टीडीएस रिटर्न में आने ही लग जाएगा 194 आर में।
हाँ तो आने लगेगा, लेकिन इस साल में क्या करेंगे? इस साल में अगर कोई क्वेश्चन
again मतलब since I'm not doing the audit of the assessee, I'm doing the audit of books of accounts. If something is not there in books, I cannot report it, sir.
एक सर इशू बहुत आता है कंटिजेंट लायबिलिटीज के ऊपर में, बिकॉज ये क्वेश्चंस उठा लोग जनरली, मैं तो ऐसा कभी नहीं करता हूँ, लेकिन बहुत से लोग जो चार्टर्ड अकाउंटेंट जो है, ये जो फोरम सब में सुना मैंने, they give the figures of the contingent liabilities in the accounts, and उसके कारण क्या होता है, क्योंकि वहां पर ये नहीं लिखा the nature of contingent liabilities debited to profit or loss account,
right
और के अंदर में खाली contingent liabilities लिखा हुआ है, something like that. So people give the figures of the contingent liabilities that is appearing in the notes to the account. इसके कारण क्या है कि वहां पर एडिशन हो जाते हैं।
बराबर है सर।
तो
we are not giving sir,
and it should not be given. I think it should be given only when contingent liability is debited to the profit or loss.
Absolutely, I agree with you.
One more query is there, sir, with regard to payment made for clubs. अब payment made to clubs के अंदर भी क्या होता है कि देना पड़ता है. Again, that is disallowed. In most of the cases, everywhere it is disallowed. How to tackle this thing?
So again, मतलब rather than taking a very high idealistic view, we need to take a practical view. How CPC is treating it, they are treating all these as personal expenditure disallowed. So if as an auditor, I don't feel this is a disallowable expenditure, this is a personal expenditure, I feel it's a business expenditure, so there's no need to report it.
It's not reported.
So otherwise it will get disallowed.
Yeah, they disallowed totally.
And we cannot simply take that high moral position that I am acting as an auditor, I have to report whatever is to be reported. We need to ultimately see the final consequences of it also.
One more thing which is, I think, is a bit technical, say deduction of TDS. If the TDS is deducted under 194C instead of 194I, like I sent you the case ki 2%. So अब मैं एज एन ऑडिटर जब मैं जाता हूँ तो 194C के अंदर में मुझे पता चलता है कि हमने कम डिडक्शन किया है, जबकि 195I के अंदर में मेरा ज्यादा डिडक्शन हो गया है, एंड इसके कारण जो है नेचुरली एसएससी का तो एडिशन हो जाएगा 30%. तो हाउ टू रिपोर्ट?
टीडीएस डिडक्ट तो हो ही गया है ना सर?
हाँ, टीडीएस डिडक्ट हो गया, लेकिन रॉन्ग एंड में हुआ है.
हाँ, सो इट इज सिमिलर लाइक वो टैक्स ऑडिट रिपोर्ट हमने गलत सेक्शन में कोट कर दिया है, बट द बेसिक पर्पस हैज बीन सर्व्ड, टीडीएस हैज बीन डन. So I don't think it needs to be reported then.
It did not report, है ना?
No.
सर एक क्वेरी है जो कि थोड़े अकाउंटिंग पॉइंट ऑफ व्यू से है कि अगर किसी पर्सन के इंडिविजुअल हेड में इनकम फ्रॉम प्रोफेशन आती है एंड इट इज क्रेडिटेड इन द सेम बैंक अकाउंट, और वो बिजनेस के लिए कोई अलग बुक्स ऑफ अकाउंट्स मेंटेन नहीं करता है, अपने पर्सनल बुक्स के अंदर में ही उसने अपनी प्रोफेशनल इनकम को ऐड करके रखा हुआ, मतलब दिखाया हुआ है, इस केस में हमको प्रॉफिट एंड लॉस अकाउंट बैलेंस शीट कैसे बनेगी? See, I am giving the consultancy income of 5 lakhs rupees per month, and whatever amount I am crediting, I am debiting, I am depositing in my same bank account. उसके अगेंस्ट में जो खर्चे हो रहे हैं वो भी खर्चे मैं अपने पर्सनल अकाउंट में डेबिट क्रेडिट करता हूँ मैं, और मेरा साल के अंत में कोई रिसीवेबल भी नहीं है, कुछ पेबल भी नहीं है.
आप अकाउंटिंग कैसे कर रहे हैं? जो पर्सनल एक्सपेंडिचर है वो आप नेचुरली कैपिटल अकाउंट में रूट करेंगे ना,
तो कैपिटल अकाउंट में जा रहा है.
जी हाँ.
तो क्या उस केस में क्या मुझे पूरी पर्सनल अकाउंट की बैलेंस शीट बनानी पड़ेगी कि कैसे करना पड़ेगा?
नॉट नेसेसरली सर, आपका जो भी पर्सनल रिलेटेड ट्रांजैक्शन है वो तो कैपिटल अकाउंट में चले गए हैं. तो P&L अकाउंट में है वो तो खाली आपका प्रोफेशनल ट्रांजैक्शन आ रहे हैं.
Only professional income will come, and that is credited to P&L account and balance sheet वैसे बन जाएगी. Whatever income is there, that is credited.
बाकी जो पर्सनल लेजर के ट्रांजैक्शन है वो तो सारे कैपिटल अकाउंट के बैलेंस पे रिफ्लेक्ट हो जाएंगे.
मुझे पूरी कंप्लीट बैलेंस शीट पर्सनल अकाउंट की देने की जरूरत नहीं है.
बिल्कुल नहीं है सर, बिल्कुल नहीं.
क्योंकि इस टाइप के सब प्रैक्टिकल इश्यूज आते हैं.
हाँ, आते हैं सर, बराबर आते हैं. क्योंकि
मेरे भी 2-3 क्लाइंट है, मैं भी वैसे ही कर रहा हूँ जैसे आपसे मेरी बात हो रही है कि मैं भी उसमें भी ऐसी तरह से कर रहा हूँ. दिस इज द वे.
जिस एक्सपेंडिचर का प्रोफेशन से कोई लेना देना ही नहीं है, मेरे
लेना ही देना नहीं है, तो उसके अंदर में जो भी प्रोफेशनल चीजें हैं उसको मैं अलग कर देता हूँ, अलग करके उसी की बैलेंस शीट पीएल बनाकर सबमिट करता हूँ.
यस, वही सही
है ना सर? कोई और क्वेरी है? ऐसे तो सर आपने काफी डिटेल में इतने 2 घंटे के अंदर में कंप्लीट कर दिया है, एंड काफी छोटी छोटी इशू जो है, जो कि मेरे को भी बड़ा अच्छा लगा, क्योंकि मेरे भी शायद दिमाग से बहुत सी चीजें छूट जाती है काम करते हुए भी है. So, but then it was a really wonderful discussion, and I will request now CA Raj Runta to offer a vote of thanks. एक मिनट सर, मैं देख लूं चैट बॉक्स में कुछ और क्वेरी अगर है तो।
नहीं, कुछ नहीं सर, देख लिया मैं।
देखने
Nothing is there.
ओके सर।
हेलो
रुंगटा जी प्लीज ऑफर हार्टी वोट ऑफ थैंक्स टू आवर एस्टीम्ड सीए मनीष जफरिया जी। मैं एक चीज जरूर यहाँ पर थोड़ा ऑडियंस को बोलना चाहूंगा कि लास्ट ईयर में हमारा जो सेशन हुआ था उसमें मैंने बहुत लंबी चौड़ी डिटेल बनाकर क्वेरी बना के दी थी मनीष सर को, और आई थिंक उस डिस्कशन को इन्होंने भी काफी एंजॉय किया होगा, बिकॉज
Definitely, sir, definitely.
you are also grilled, to be very frank, today क्या बोला जाए। और इस बार भी मैं चाहता था कि कुछ थोड़ी स्टडी करूं, लेकिन समय नहीं मिल पाया मुझे, लेकिन फिर भी आपने सर काफी चीजों को बहुत अच्छे से एक्सप्लेन किया। नाउ रुंगटा जी।
Am I audible?
हाँ हाँ
Hello. Hello.
Yeah, sir, please.
ऑडिबल सर।
Yeah. Thank you, Mundra ji. And first of all, very good evening to Manish ji. And we are very thankful, BBD Bag CA Study Circle, since for you have accepted our invitation and spared your valuable time to deliver your thoughts on tax audit, and especially on the very burning topic, which is clause number 44, which you have dealt very clearly. And Manish sir has dealt the the applicability of the tax audit in a different situation, even though with respect to all the cash transactions criteria. You also differentiated section 44 AD and ADA very clearly, and also rightly pointed out the IT law and the procedure followed by the CPC, which is a very practical problem faced by the every professional as well as the clients. I think the Manish ji has a very the deep study on the tax audit and the practical how this CPC deals with the different clauses. So I'd request Manish ji, being a senior the tax chartered accountant, to send one representation to the CA Institute, wherein this CPC, in spite of the repeated litigations which is being faced by the professionals and dealt by the various the appeal stage and the tribunal, the CPC is not getting taking the situations to correct it in the next thing. So CA Institute should make a representation, and for which I think if Manish ji sends a representation to the CA Institute, which should be taken up by the CA Institute to the CPC. So it would be, I think, advisable, and I think this the Pramod ji would suggest this should be a good idea. And again, I'd like to thank Manish ji once again. And the lively part of this was that since for Pramod ji, he himself represented the whole audience, and he asked different questions clarifying to the audience the different queries. Very much thanks to Pramod ji, so that after his query, after his questions, the number of queries which were in the mind of the different audience was cleared. So I'd also request to the participants who put their query in the chat box for the benefit of the others. And I thank you all the participants being participated till end. So that's all. Thank you.
Thank you.
Hello.
Thank you, sir. Thank you, Manish ji. So nice of you for spending your time and really giving a great insight into the tax audit.
Yes.
Thank you once again, sir. And we hope to seek your services at some time later in the month of November, December. Let this busy season be over.
Anytime, sir. My pleasure. My pleasure.
Sure.
Yeah.
Sure, sir. Thank you, sir.
Thank you.